is embedded finance? It is actually a structure where non-finance companies or fintechs try to offer their customers access to the financial services such as credits or opening a savings facilities through their technology platforms. In the market like Malaysia's, companies like Ringgit Plus and iMoney offer such platforms that it brings together loans and also the credit cards onto their platforms that offered by different banks, okay, in the countries. This is in a way that a strong partnerships that allowing a banks or the financial institution or the fintech who are offering these financial services to aggregate their services on these platforms. That helps them to acquire the customer at a faster pace and also at a cheaper cost. Now another trend is we are seeing that buy now pay later is another avenue that will also grow aggressively in such partnerships, where many of the e-commerce or the e-wallet platforms also today start offering the buy now pay later services, whether by their in-house financial service platforms or is aggregating some of the capability from their partnerships. So in all together, we see the trends that banks and the consumer is moving towards expecting more financial services through these technology platforms. That's where it creates the opportunity for the embedded finance. ASEAN is likely to become another hub for digital banks. So we see it attracts a lot of VCs, fintechs, big techs, and China firms into investing into setting up new digital banks in these regions. In the emerging markets like ASEAN, we have a very big landscape for these financial inclusions. This means that they bring out a new market opportunity for new players, a new entrants like that. Okay, so you can see a strong customer acquisitions amongst these new digital banks. So what we can see, the impacts to the ASEAN is where there are two. Number one is the impact on the new digital bank entrance. Okay, so it attracts many investors into setting up new banks, okay, to compete with incumbents. So they are aggressive, they are focused, and they are actually focusing on niche markets so that to be differentiated from the incumbents in the markets. Now we also see the second impacts to the incumbent banks. Apart from actually doing your traditional digital transformation journey step by step, so there are some banks also keen to test on the new digital bank platforms. That's where they are investing into a buy model architectures or strategies in the way that they continue to keep their legacy systems to service their existing customers, but they are also trying to actually set up a new technology platforms to actually power their new digital bank under a different brands. So they can build a new sub-brands. In this way, they can actually test out the technology as well as their business strategy at the same time, and to ensure that this is a future proof before they actually migrate out from their legacy system into the new systems. So this will be a sustainable model and less risky for a bank to take to test out a new market as well as the new technologies. And this technology is going to bring them for the next 5 to 10 years ahead, okay, so that they stay relevant to service their customers in these decades. Today, when we're moving into hyper-personalizations, we use the technologies with the advanced analytics and AI. So we are using machine learning and deep learning to understand your customers better. The first step is to understand your customers. This is where it gives you a better insights about how you can deal with the customers. Okay, what is their needs? What can you offer to them? How can you help them? By having these customer insights, deeper analysis of customers' activities and financial status, we will be able to interact with the customer more effectively. So all this actually leads towards cross-selling and upselling activities in the bank in a non-intrusive way, because you are in a way not doing a direct hard selling marketing, but you are actually cultivating a better financial management at your customer's end. So we turn it into something what we call it as financial coaching. So our mobile digital strategy is actually to perceive, to be deemed as a financial coach to the customers. especially relevant in the context of financial inclusions. The most important part is you need to have not only to know your customers, but also to have a call to actions, robo-advisories to guide them through the financial freedoms.